Hi, this is Zak Mir with the Bulletin Board Heroes here at Zaks Traders Cafe for Monday, the 18th of September. Starting off with the FTSE 100, which has managed to retreat from being overbought for the first time since February. We actually had overbought peaks back in December, January, and mildly in February, and obviously the February peak didn't end well. We fell about 800 points from that peak. Hopefully the same won't happen again. At least while we're above the 200-day moving average there at 76.30, and that broken February resistance line. We're still looking for 77.80 at a May resistance line projection. Above that, and we're looking towards 8,000, which is the top of that steep August rising trend channel. But I think most of us will be happy if we just stay above 76.30 and unwind that overbought state of affairs that we have at the moment. 50 and 200-day lines both rising now, so the next time they meet could be into a golden cross. The run up to a golden cross tends to be the strongest part in the cycle. Let's see if we haven't already had the best that the FTSE can do over the course of the last month or so. On to the DAX, and here we've also basically followed in the footsteps of the Dow, which we'll see in a minute, peaking through the 50-day moving average, 15,900. Risk of a test of the uptrend line there from December, around 15,600. Worst case at the moment may be down to 15,200, and that May support line projection, but ideally we stay above the 200-day line, currently rising at 15,500. Clearance of that 50-day line area, maybe 16,000 to be safe, would then take us up to 16,500, hopefully by the end of next month, although, as I've said quite a few times now, September, October, not exactly known for their breakouts for equities. Onto the Dow, and here the picture is of the aftermath of that failure on Friday. We've got that uptrend line there from last October, 34,400, so there's a risk of testing that. Need to see a proper end of day close through 35,000, recent turn of the month resistance for this market. Worst case is probably down to the 200-day line at 33,700, which is also June, July support for this market. Breaking 35 suggests 35,500, but maybe we're not really looking for that too soon at this stage. Bitcoin is next, and the picture here mildly better than it has been for quite some time. Looks as though we're going to get a break of the 50-day line there at 27,100. The big prize would be a break of both the 200-day line and the resistance line there from July at 28,000, and that would be hopefully the signal that we can head back up to 30,000 sometime during October. The bear trap there from basically below the, or at the June support there, 24,900. But it was a bear trap from below the August support for September, and that is a positive sign, especially when combined with the bullish divergence that we've had in the RSI window since the middle of last month. On to the stocks, and quite a selection today. Difficult to choose between all of the contenders. The first one is Afentra, and here we had a massive unfilled gap to the upside. What we want to see is we can break that line there from back in July last year, which is around 27.75 pence. Above that, we're looking for the shares to head up to as high as 40 pence by the end of next month, if we can get a decent close above that 28 pence zone, 27.7 pence zone. That's from that line from back in the summer of last year. On to Corcel, where it looks as though the charting has worked. We bounced off the old resistance around 0.39, and I was suggesting in the last time I looked at this that we could then retest the peak of earlier this month around 0.55. That looks as though that should be a done deal by the end of the week. We've got a potential touch or meeting of that resistance line there from back at this time last year, 0.57. And I suppose after that, then one would probably be looking for a rather greater target. At this stage, slightly a bit of a moot point, but possibly up to the line that I'm just about to draw now, so 0.8, if we can clear the 0.57 zone. 0.8 is a line from back in July last year, an upper parallel of the resistance lines that have been targets over the near term. But a V-shaped bull flag, mid-move consolidation, it looks like, and rising 50 and 200-day lines were about a week or less away from a golden cross, and the shares have lived up to the idea of being at their strongest in the run-up to a golden cross. But 3.57, looking for 0.8 by the end of next month. And Corcel On to critical metals, which has looked as though it was finding a base there at basically what was old resistance back in September last year, 16 to 17 pence. So the old resistance became new support, and now we've got a nice little B-shaped bull flag, looking for at least 23 pence at that December resistance line, and then up to 25 pence, hopefully, as soon as the end of this month, given today's very strong news. A sort of mini cup and handle formation there for Corcel. Onto a stock which somebody mentioned to me, I think in the street, Chariot, and here what's interesting that we've had a massive bear trap from below the March support there, 13.25 pence. Above that on an end of day close basis, looking for the 50-day line at 14.75, then hopefully up to as high as 15.75 by the end of this month. So giving that a couple of weeks or less, and let's see how the shares do. But the key here is to hold above 13.25, the old support for the stock. Onto a stock which I don't think I've looked at for years, Directa Plus, but we had a bear trap island reversal, so gapping down in August, gapping up in September, holding the top of the gap there at 45.5 pence, and above that looking for at least 60 pence over the next 2 to 4 weeks. Punchy call, but it's a punchy setup there for Directa at the moment. On to ECR Minerals, where we have the joy and delight of having Doc Holliday on the board there. We bounced off a line of support there from this time last year, basically the end of September, 0.18, and while we're above that, it's a bear trap from below 0.22, i.e. if we can stay above 0.22, initial target here 0.35, hopefully by the end of this month, maybe by the end of next month, retesting July resistance at 0.51. So looking very encouraging there while we're above 0.22 at ECR Minerals. Onto a stock which has been pushing ahead very nicely over the recent past, Great Southern Copper. Recent support around 2.75 pence. Above that, we're looking for up to 4.75 and maybe 5 pence by the end of next month, powered by the latest gap to the upside and the uptrend line in the RSI window, which seems to be working. We had a golden cross last month between the 50 and 200-day lines. Hemogenics is next, and it's a bit of a lap of honor, just because, as you can see, the shares just hit my target line there at 2.6 pence, and actually look as though they might be able to keep on going. What we would like to see is an end of day close above really the top of the gap there at 2.16 pence. While we're above that, looking to fill the gap down that we had back in January at 2.95 pence by the end of next month or even sooner. So let's see if Hemo steps up to the plate there, but holding above the 2.15 area is the key now for the shares. On to another stock which doesn't get much airtime either here or anywhere else, Microlise, unfilled gap to the upside, bear trap gap reversal from below June support, and above that at £1.15, looking for as high as £1.50 by the end of next month. Not sure there needs to be much else done there, but we do have bullish divergence as well. The line there from the beginning of June going through the support that we've had here back in September, but the bear trap from below the June support there, 115, really the key, and we'll still want to stay above that over the near term. On to Pantheon, which I described as one of the charting setups of the year, and it certainly has been so far. The glimmer of hope came actually around the 11-12 pence level, and I was suggesting I couldn't see why the shares would rise a lot, but obviously we had all our answers ever since. Unfilled gap to the upside, broke the gap up day on the 30th of August, and it's been basically up and away ever since. V-shaped bull flag breakout, and above 25 pence we were looking for up to 32 pence, which I think we may have, we haven't quite done that, but hopefully we'll do that soon. Above 32 pence, looking for 50 pence to fill that gap by the end of next month. That gap down from back in March, and as I said, above 25, looking basically for 50 here on Pantheon. On to Premier African, which keeps on trying to bounce back, which is good. Rising trend channel there, another touch of that price channel floor from June, around 0.36. Above that, we're looking still for the top of the range, around 0.63, and the 200-day line. If you're cautious, you wait for an end-of-day close above the 50-day moving average at 0.46 before assuming we'll head back into the 60s there. On to Plexus, which was another stock of the year. Here we've got a bull flag. It looks like a mid-move consolidation there, based at 13.75 pence. Above 13.75, we're looking for the shares to head up to a resistance line projection target that we've had from back in June last year as high as 20 pence. Hopefully we'll see that by the end of this month. If you're a fan of the shares and looking for greater glories, then there is another potential line of attack to hit, and that would be up to the low 30s, 31, 32 pence at a late 2020 resistance line projection. So above 20, looking for 31. Want to stay above the 13 and 3/4 pence area for Plexus. On to the last few. First one is one which has been attacked by the bear, so we'll obviously like looking at that. Here we had a little rally for Regtech, but it's faded a bit. Maybe there's more attacks to come, but we've got a line of support there from back in August. That's running through 170, so I really want to see the shares remain above 170. Above 170, we can still retest the £3 area, which was the peak before the bears threw mud at the stock. Nice turnaround here from Scancell, and here you can see that we've broken this falling wedge after the bear trap from below the July support there at 8 3/4 pence. Above 10 1/4 now, looking for up to 16 pence by the end of this month. So it looks like something decent is going on there. And of course we've had this turnaround backed by bullish divergence with the low for September, but higher RSI trace. Just a couple of shares to go now. First one is TPX, otherwise known as TPX Impact, and here we've had a sideways shuffle above the 50-day moving average, in fact the 50 and the 200-day moving averages, which is exactly what we like to see. The 200-day line basically flat, but the 50-day line is rising, and we've got an unfilled gap to the upside above that, so really quite confident about looking for a 66 pence target at the top of that rising trend channel from back in January, and hopefully we'll see that by the end of next month. So quite confident about that one after that sideways shuffle above a rising 50-day line and the unfilled gap to the upside. Not quite so bullish with Wishbone Gold, but it's making the effort here. Here you can see that we've got a rising, still got a potential rising trend channel base, still shuffling along, trying to work out exactly where the floor of that channel is. But the key here is that we've got a rising 50-day line, which is very encouraging, and that suggests that we could at least go to fill that gap up to 2.9 pence over the next few weeks, maybe before the end of next month. That's it for me today. More updates tomorrow.